All right, let's get right into it. ManpowerGroup just dropped their latest quarterly numbers, but honestly, the headline figures, they aren't the main event. Not even close. The real story here is a huge pivot, a massive bet the company is making on artificial intelligence. So we're going to deconstruct their Q1 report and figure out what this big bet on the future of work is all about. And hey, you don't have to take my word for it. The CEO himself, Jonas Prising, basically laid it all out. He's talking about using AI to get ahead of the competition and to create real long-term value. So yeah, that's going to be the thread we pull on throughout this whole explainer. So here's how we're going to break it all down. First up, we'll look at the Q1 numbers to see what's happening right now. Then we'll unpack this huge $200 million transformation plan they've kicked off. After that, the fun part, how AI is already boosting their growth. We'll also cover what this all costs, and finally, what's on the horizon for ManpowerGroup. Okay, first things first, let's dig into that Q1 report. You've got to know where you are to understand where you're going, right? So let's get a handle on their current financial landscape. So at first glance, things look pretty decent. $4.5 billion in revenue. That's up about 3% in constant currency. Seems stable, right? But, and this is a big but, the real story is what's hiding just beneath that top-line number. And here's where it gets really interesting. It's almost like a tale of two companies inside one. You've got their classic Manpower brand, think traditional staffing, and it's actually doing great, up a solid 6%. But then you look at Experis, their high-tech professional services arm, and whoa, it's down 9%. That split, that contrast, that's the challenge they're trying to solve. And this right here shows you how that all translates to actual profit. That core Manpower brand, it's the engine of the whole company, pulling in a massive 62% of the gross profit. It's basically paying the bills and funding this huge transformation, while the other parts of the business are struggling to keep up. So you've got this problem, right? One part of the business is carrying the other. What do? Well, ManpowerGroup's answer is this. A massive $200 million strategic transformation. This is their big move. The goal here sounds simple, but it is incredibly ambitious. They're not just tweaking things around the edges, they're trying to fundamentally rebuild the company from the inside out. They want to be faster, smarter, and way more competitive in a world that, let's be honest, is changing like crazy. And they're attacking this from two sides. Think of it like this. On one hand, you've got the back office. That's all the internal plumbing, standardizing their finance and IT systems. Super important, but not exactly glamorous. But then on the other hand, you have the front office. And this is where it gets exciting. They're injecting AI right into the heart of their business. Recruiting, sales, all the stuff that touches the customer. And look, this isn't just some cost-cutting exercise. The whole point is to get better results. They're betting this overhaul will help them place people in jobs faster, make life better for both their clients and the candidates, and of course, get those profit margins back to where they used to be. And hopefully, then some. Okay, now we get to the really, really cool part of this whole story. Let's talk about AI. Because for ManpowerGroup, this isn't just some buzzword they're throwing around in a slide deck. No, they're actually showing how it's already making a real difference. They're basically looking at AI through three lenses. First, how can it make them more money? Using it to chase down new sales leads. Second, how can it make the whole process better for job seekers? And third, can they actually sell these new AI tools and services directly? And here's the proof in the pudding. Get this, they're expecting to generate an extra $200 million in revenue just from one AI tool. It's a sales engine that sniffs out the best leads. They started with it in France, and they're already rolling it out to half their markets. That's not hype. That's a huge, tangible result. It's also completely changing the game for how they find and talk to candidates. I mean, check out this number. Over 25,000 interviews done by AI in just 6 months. That is just incredible scale. It shows how fast they're moving to make the whole screening process way more efficient. But honestly, this next number might be the most important one of all. More than 80% of their entire workforce is already using AI tools. Think about that. This isn't some little experiment tucked away in a back room. This is a massive, fundamental shift in how everyone at the company does their job day in and day out. Okay, so this all sounds great, right? But as they say, there's no such thing as a free lunch. A transformation this huge costs a lot of money. So to really get the full picture, we have got to talk about the investment. And this chart right here lays it all out. It's that classic, you gotta spend money to make money. You can see they're investing heavily this year and next, with the spending really peaking in 2027. But then look at the payoff. By 2028, they expect to be saving $200 million a year permanently. That's the end game. And that big spend, it directly explains some of those headline numbers we saw in the Q1 report. So when you look at their reported profit and think, that seems low, you have to remember that these massive transformation costs are being baked right into the numbers. This is really the key to decoding their earnings. If you ignore the special cost for a second, their adjusted earnings were about 51 cents a share. Pretty normal. But then, bam, you see that big chunk taken out for the transformation program, 46 cents per share. That's what drags the final reported number all the way down to just 5 cents. It's all about that investment. Okay, so let's recap. We've got mixed results in the business, a huge investment plan underway, and this massive pivot to AI. So what does all that mean for the next few months? What's the outlook? Well, here's what the company is officially telling investors to expect for the second quarter. They see revenue growing somewhere between 1% and 5%. Margins should hold steady, and they expect earnings to pop back up to around $1 per share. Basically, it sounds like they're expecting things to stabilize while all this transformation work keeps humming along in the background. So when you boil it all down, the story for ManpowerGroup right now is crystal clear. It's a classic case of short-term pain for long-term gain. They are 100% willing to take a hit on their profits right now because they're building something for the future, a company that's leaner, smarter, and powered by tech. Which, of course, leaves us with the million-dollar question, or maybe the billion-dollar question. The world of work is changing faster than ever before. So is this huge, risky AI-powered bet the thing that's going to make them a winner for the next 10 years? I guess we'll have to wait and see. All right, that's our look at ManpowerGroup's big AI pivot. Thanks so much for joining me.